I can't imagine a scenario in which the stakes are any higher, given what this market looks like coming into this number.
Because I think it's the most important week for tech earnings, probably in the last 7-8 years. You know, right now, the risk off is just massive that we're seeing. You need to see strength from the likes of Alphabet, from Microsoft, especially on enterprise in terms of cloud. This leads into Apple and others that we're seeing. It's a white knuckle period, and I think there's the key earnings here.
I mean, NASDAQ's on track for its worst month since October of 2008, down 22% from its record highs. Both of these stocks, speaking of Alphabet and Microsoft, are in bear market territory. They're both down more than 20% from their highs. So this has been like the epicenter lately of where the critical selling has been taking place. Is this going to stop it or not?
Look, I believe this is going to stop it. In terms of stemming for a positive trend in terms of tech, I think it comes down to work from home names and the COVID beneficiaries. Those are ones the multiples continue to compress. But in terms of the enterprise names, especially cloud, that's why Microsoft, I'd say of all of them, that's the most important. That's going to have a massive ramifications across cybersecurity, across the rest of cloud. And I think that's what leads us higher along with semis.
Belsky, what's at stake today when these numbers start breaking, which is going to happen any second?
Well, I mean, listen, this has been an area that has been providing stability, these big names. And I really still believe this is a very, very key moment here for the market in terms of building credibility, building at least some stability in overall prices. So we're bullish still on these names, and I would be surprised if the names are weak, quite frankly.
Bryn, they've been weak lately for certain. Apple, in terms of mega cap tech, Apple's down for its worst month since September of 2020. Microsoft, worst month since 15. Amazon, worst month since 18. Alphabet on pace for its worst month since 2010. Do you feel the pressure is, look, I'm looking at the Dow right now, finished down 800 points today. So we finished at the lows. That raises the stakes even more, doesn't it?
Yeah, it's like to hold or not to hold. We're right back where we were on February 24th. And I think that the Google and Microsoft numbers will be really important for the NASDAQ as we're approaching 13,000. I do think these Microsoft and Google are not Facebook and Netflix. I think they will have consistent earnings. But Scott, like we talked about yesterday, these earnings really don't matter. What matters is what multiple the market wants to pay for these earnings on the tech side. And right now, the market is clearly saying we want to pay lower multiples. I do think that continues at least for the next couple of months until we get past these first two Fed tightening cycles in May and June.